All right. One of the things that we're focusing on here at BNN Bloomberg is politics, not only in Canada, but also in the U.S., especially with the upcoming midterm elections that take place in the middle of a president's term that could potentially flip Congress and ultimately decide where policies go towards or don't go towards the end of Joe Biden's term. Let's bring in Jeannette Lowe, who's the Director of Policy Research at Strategas, to give us some insight. And the reason, I guess, as market participants, we get excited about this is because of the stat that every single midterm election in the post-war period has led to, maybe not directly because of, a market rally from the November to April period on the S&P 500. And that's happened every single time. Do you think that's going to happen again, Jeannette?
Yeah, thanks for having me, Amber. There's definitely this midterm election market trend that we have. So midterm elections are the second year of the U.S. presidential cycle. They tend to be the most volatile of the four-year cycle. So we usually see an average intra-year decline of 19% in that midterm election year as compared to a 12 or 13% intra-year decline in the other years of the cycle. But it usually tends to be a buying opportunity as well, with stocks generally up 1 year later from the low. And we haven't seen the S&P 500 fall in the 12 months following a midterm election since 1942. Usually the reason for that is just getting to the election tends to be a catalyst for stock. Investors start to see the uncertainty coming out of the market. They have a better understanding of which party is going to take control in Congress and in Washington and what policies will be implemented. But this year it could be a little bit different. We've actually never had a recession in year 3 of a presidential cycle. This year, there is a possibility that we will have a recession. So that could change what happens to stocks and maybe it disrupt that historical trend. And the second thing is obviously that inflation is still quite high in the U.S. And if we look back at what the market did in 1974, which was a midterm election year and which was a high inflation year, stocks didn't rally coming out of that election. So the historical trend would be positive, but we do have 2 caveats to consider.
All right, fine. So let's pay attention to what's actually happening, I guess, if we're to listen to you. What is actually happening? What are the polls suggesting, and how could that affect a policy going forward?
Right. So if we look at what currently the consensus is that, if you look at what the polls are doing and that you're seeing more momentum for the Republicans in these last few days of the election, it looks like the Republicans will take over potentially both chambers of Congress. We also, put into place a basket of stocks that looks at what stocks are tied to Republicans winning, which stocks are tied to Democrats winning. And if we look at those, we also see probably like a 67% chance that the Republicans take over. And you're starting to see what really matters for elections is not the market overall, but what are the specific sector or stock implications that are tied to each party's priorities and what actually might get done next year. And so if we're looking at what our portfolio is looking at, we're seeing that energy infrastructure names, defense spending names, and immigration enforcement names are outperforming. Whereas on the flip side, you're seeing like the clean energy names underperforming because they'd be more tied to the Democrats.
And so that's really helpful for investors to look to those sectors if, in fact, that is the outcome that happens. But it also potentially means gridlock, right? If that happens, essentially nothing gets done. And there are some things that need to get done. I don't know how often we talk, how often it's been since we've talked about the debt ceiling, but that could crop up and become another big issue for the markets.
That's right. So if the Republicans sweep in this election, we think that's the most gridlock scenario. There's going to be some infighting between the parties. We think the Republicans are going to focus more on energy infrastructure, energy permitting reform, immigration, things like that. But one of the things is if the Republicans sweep, we do have to lift the U.S. debt ceiling in 2023. Maybe not until the third quarter, but already the Republicans are starting to discuss the idea that they're going to want spending cuts in exchange for their votes to lift the debt ceiling. This kind of harkens back to what we had in 2011. We also had a big debt ceiling fight that year after the 2010 midterm election and some market turmoil that obviously resulted because of that. So that's starting to put a little bit of of concern among investors, but policymakers as well. And so one of the things that we are seeing is policymakers are discussing maybe they could lift the debt ceiling during the lame duck session, which occurs after the midterm elections, but before the new Congress is seated in January. And they might be able to lift the debt ceiling then in order to avoid this fiscal fight in 2023.
Let's just talk about inflation, because that's kind of what's different this time around. It's an issue we have to deal with now that they haven't had to deal with in a while. How does that complicate, this gridlock situation?
Yeah, so we're definitely going to be seeing a lot more fights about what spending priorities can get done and what cannot get done, because you're also obviously with inflation, interest rates are going up. So the U.S. is going to start to see its interest costs going up next year. That's going to have an impact on the budget and what could be maybe cut on the discretionary side. So we're kind of watching that play out. One of the things that's really important, a lot of people talk about the election in terms of what does it mean for 2023, but it also is really important too for this lame duck session of Congress. So Congress still has to pass a budget at the end of this year. They still have to pass a defense authorization bill. We expect them to put forward a fair amount of an increase in defense spending, and also maybe for some other priorities like healthcare research. And so that's something that can also get done, as well as a number of other things. So let's just say we have a Republican House and a Democratic Senate. You could actually see a lot of priorities try to get done in this lame duck session before you could potentially have budget fights in 2023 with the new Congress, and also with the squeeze from the higher debt costs that would be playing into the U.S. budget. So that's something else that we're kind of watching. And depending on how big that lame duck bill could be, again, it'd be bigger if you had a Democratic Senate rather than a Republican Senate. But if it's bigger, it also could be viewed as inflationary by the markets, and they might be worried that too much spending actually could make the Fed's job harder.